Okay, gentlemen and ladies, we're just starting in a minute. Just a minute, we get started. Thank you so much. Okay, thank you so much, and distinguished ladies and gentlemen, I want to welcome you to this conversation from Tekedia Capital. My name is Ndubisi Ekekwe. I'm speaking at the moment from the United States here. I want to welcome you from anywhere you are from around the world. Good evening, good afternoon, and also, we are likely also, good morning. So thank you so much for joining us. Just for me to confirm that my voice is audible enough, please, if you can momentarily, or if you can also, okay, great. So thank you so much. So we will have a conversation.
Thank you.
Okay, thank you, thank you. Thanks so much. Thank you, thank you. So I will make a very short, quick presentation here. What we are doing, Tekedia Capital, looking at it from the academic angle. And then after that, we just have few questions and answers. And hoping that within the next 45 minutes, we'll be out of here. So I want to thank you so much for spending your wonderful weekend with us here, and truly appreciate it from here. So let me share my slides and we will get started. So the topic is investing in Africa's next unicorns. A Tequila capital playbook. It's a unicorn to start with. It's largely a private company that has a market capitalization or market valuation of at least $1 billion. It's just a terminology that has become very, very common these days, because it's something that also makes it easy for people to communicate within this whole space. So to begin that conversation, I will begin by saying that if you look around the world, you see that there are so many challenges. Of course, if you look at it from another angle, these challenges are also opportunities. There's so many things that people are going through in the domain of healthcare, in the domain of agriculture, food security. Across all these challenges abound. In America, we have a very, very interesting challenge today, which is they can't just find people to hire. I mean, that's a very, very ridiculous one that many companies are folding up because they can't find workers to hire. And even if you know how to make coffee these days in Starbucks, a company that sells coffee, they can even offer you a university scholarship just because they want to keep you for making coffee. You just want to stay there to be making coffee, and they will train you to university. In some other places, we have severe cases of COVID-19, and there are places where the challenge is insecurity, also challenges of healthcare, and all kinds of challenges. But in all these challenges, you can also see opportunities. And these opportunities and challenges, they cut across market sectors. There are the problems of agriculture. People are still going to sleep without having the right necessary food. So I have a problem of healthcare. We have seen the paralysis that COVID-19 has brought to the world. We're also seeing the challenges of financial services, where some at the bottom of the pyramid are still largely excluded in the banking ordinance. We also have real estate. People buy properties, and all of a sudden stories begin to emerge that the documents you signed possibly were not the real thing that were supposed to sign. So in education, people feel that the young people being prepared today may not have been given the necessary opportunities people that maybe started 50 years ago. But I also have this hypothesis that the world is actually getting better. It may really look that things are falling apart. But look deeper, world is still getting better. If you look at the things that really matter, the life expectancy, we're living longer. Infant mortality has dropped. Our mothers or sisters, our cousins, many of them during childbirth, they are having childbirth without going into fertility. So the whole construct is that things are challenging, but the world is still making progress. But the question here is that we are not satisfied at that level of progress. And that means that we need to now have to see how we can deepen our capacity to actually ramp up capacity for the world to actually progress in a faster pace. And that progress is not uniform. There are places that are doing exceedingly well, and there are also pockets of the places in the world where people are really having challenges. Like for instance, in so many places in Sub-Saharan Africa, young people finish for universities cannot find jobs. And those that did not even go to university, sometimes we don't even consider them being unemployed because we just think that they don't even exist. So in energy, we don't have electricity. Digital systems are amazing, but they are also not offering opportunities for those that are not literate. So opportunities abound in these spaces where challenges are huge. So the question right now is, how are we going to tap or exploit or unlock all these latent opportunities across market segments? At Tequila Capital, what we try to do is to see that in the midst of all the challenges, there are opportunities, and within those spaces of inherent latent opportunities, what are going to become the mechanisms that we can actually go for them? So we look at 4 critical things here. And these 4 critical things are the bedrock of market systems. You have what they call the knowledge, you have what they call entrepreneurial capitalism, you have what they call capital, you have what they call labor. Of course, without knowledge, nothing can happen. People have to have knowledge before they can enter into any endeavor. You need to have knowledge of banking before you can build a banking system. You need to have knowledge of real estate before you be a good one. You have to have the knowledge of the logistics before you be a good one. So knowledge and acquisition of knowledge will remain a very catalytic thing in any economy in order to go and unlock those opportunities that emerge. So of course, it's not just having knowledge. There also needs to be a mindset of risk-taking. Are you the one that can take risks? Are you among those that can actually say, hey, I can see something on the horizon, I am going to go and capture that thing. So the spirit of risk-taking, the spirit of entrepreneurial capitalism, where people begin to live the luxury life, to go and take risks in order to fix frictions, which are evident in markets, is also something that is very critical. Of course, capital is key. If you don't have the capital, you cannot buy the things you do not have. So you need capital to buy other resources, to buy other factors of production that you do not have with you. Of course, even when you have everything, you need a team, you need the labor, you need the people that can actually go and make those things happen. So all these elements can be encapsulated into these 3 pillars: the people, the tools, and the processes. So we try to see in the world that is full of opportunity that must be unlocked, in a sub-Saharan Africa that is full of opportunity that must be unlocked, who are the people that are available for those opportunities to be unlocked? What are the tools that are available for them to go and unlock those opportunities? And what are the processes they have put in place for them to actually go and do this? As we look at those pillars, look at these elements, in Tequila Capital, we see how is the world changing the relationship between these elements and these pillars. And this is a very, very fundamental, because unlike the last maybe 25 years ago, if you did not know anything, you are actually stuck how to know that thing. In a case where your local library maybe did not have the book, or maybe you have not had opportunity of going to school. But today, because of the power of the mobile internet, the people can easily, quickly learn things they did not know. The tools are now really closely available because the internet has brought a new dimension that things that would have taken tons of money many years ago, today we can easily get them. And then the processes we can copy. We can learn from people rapidly and implement something. So what is happening here is that the ability to recombine, combine and recombine back factors of production, which are the elements, have actually become easier as a result of internet. People are now acquiring knowledge at a faster pace. It's just a question of the guy having his laptop. He's sitting in his house, he can learn whatever he wants to learn. And then the spirit of entrepreneurial capitalism has also exploded because you are learning the stories of people in New York, the stories of people in Kenya, the stories of people in Lagos, the stories of people in Rio de Janeiro. And also this capital now has better velocity. And because the web has made it possible that information asymmetry, where maybe 30 years ago, only very few people knew whom these guys were. Today, they all have websites. You can always ship your ideas to them through your pitch deck, and they will respond to you through email. So we have broken so many layers, and this is the reason why that future is coming even faster than most of us are thinking. And now labor. I don't have the capability there in Lagos. I don't have the capability there in New York. I don't have the capability there in London. Don't worry. I can find the capability anywhere else. These things are possible because the internet has made them so. So we now have a world where the tools are cheaper and the tools are also accessible. You don't have to go and break a bank before you can start. All you just need to do, have a debit card or a credit card. You can go to Amazon. You can go to local cloud computing companies. You just rent a piece of computational power and you begin to launch your vision. Then the people are global and local. If I can find them locally, I can find them globally because there are ecosystems where people converge, telling you what they know and the capabilities they have. And then the processes are easy. I want to learn some concept of management system. You can even come to us at Tekedia Medium. You can go to AWS. So what I'm saying here is there are so many elemental anchors that are helping this age of Cambrian moment of entrepreneurial capitalism, which we are seeing in Africa. And this is not an ephemeral system. This is something that is durable because the fundamentals are well rooted. The fundamentals are well rooted because the internet is powering them. It's not even a question whether your local university is good or not. It's not a question whether the people you live with are prepared to work with you or not. It's a question that the web has made it possible that people can find knowledge, the people can capture workers, the people can organize factors of production with ease across different geographies without having to raise tons of money to do that. So for us in Tekedia, we look at 4 critical things when we are assessing the opportunities in the markets. And this is really a part of our playbook. We want to look at founders, entrepreneurs, or companies that are looking at solving the frictions. Frictions are the problems that customers have. These are the problems that market systems have. Every company is established to solve a problem. Every company is established to fix a friction. As we know in elementary physics, friction is a force. And the only way to overcome that force in market system is to have a product or have a service. So if you have identified there is lack of clean water in your community, is that something that is going to be fixable? And is that a friction that many people in that community, you believe they have? So when we see that the market is there, the frictions are huge, we get excited. And we also look at now, what are the infrastructural challenges or impediments that can now affect your ability to go and fix that friction? And we're just trying to tell you our playbook, because at the end of the day, we just want to share with you if you can join us. And this is the way we look at things in Tequila Capital with our team. And we said, okay, you want to go and provide clean water in your village. But the last time, for example, in Nigeria, they changed the water rates maybe more than 20 years ago. So how are you going to make money providing clean water in that community? Provided you are not running as a non-profit or an NGO, we don't see how you can provide clean water and still maybe make more money. So if that hypothesis is not there, we see that infrastructural issues, which in this case could mean the government mandated rate for water, may not make it a viable business for us to participate with you. So regulatory issues, electricity issues, clean water, and political step, we look at all those infrastructural challenges. And then one other thing we now look at is this particular business, has it been validated in India? Or what are they doing in India? It turns out, if you look carefully, that India is actually a test bench for you to validate any business idea you may be thinking of in Africa. The GDP of India is roughly about 3 billion. The GDP of Africa is around 3 billion. The population of India is around 1.3 billion. The population of Africa is 1.3 billion. Of course, there are disparate changes. Africa is divided into 54 or 53 or whatever countries in one continent. India is one. So what we usually do, if you are building something something that replicates what somebody has done in India, can divide your capacity by a factor of 5. That factor of 5 division is taking into consideration that the disparate African economies will affect your ability to combine the factors of production you are working, making you less efficient because you now have to deal with more than 50 countries instead of dealing with one country. But nevertheless, the hypothesis remains the same, that if this thing had worked in India, there is a very high chance that it can work in Africa. And in our capital here, we say, what is this really, this Africa? If it's a consumer business, we like Nigeria as number one because it has a population. We like Kenya. It's also fairly has a population. And South Africa, to a large extent, we are not going in there because we think the South African economy is totally matured. You need so much more money to have relevance there. Unlike where $50,000 can make impact in Lagos, and in South Africa, you may need to have 400, 500 because they have a high level of maturity that 50,000 may not make a lot of impact. So we also like Ghana to a small extent. But now, outside these 3 core countries, we will say, before we go into looking at the business in Rwanda, before we look at the business in Gabon, before we look at the business in other African countries, we want to see that that business has established its roots in either Nigeria, Kenya, or Ghana. And from these 3 countries, it could now launch into all these other according tier 2 countries. Not necessarily tier in terms of size, but looking at social in terms of opportunities that are available. But if you are launching an enterprise company, we don't care. An enterprise company can work in Rwanda, which is a very small country population-wise. And in that case, we now expect you to tell us if you have lots of opportunities with potential buyers of that particular product that you are bringing in. Because it does not have a critical mass for us for a consumer business. So at the end of the whole thing, we look at those models and say, hey, this business has a promise. The final one is, what is the moat positioning? A moat simply means your ability to protect your castle. The castle comes back to the old ancestral kingdoms where the king will live in a palace. And surrounding the king is the mechanism that something has to be built around to protect the palace. Some people will put where the king lives in the body with water body surrounding that. Some will also be on the top of a hill so that before the enemy comes, right on the hill, you can see that the enemy is coming, right, to take over the kingdom. So we want to see, what is your moat? Your moat are those things that protect the kingdom, that protect the palace, that protect the castle. In the world of internet, we at Tekedia Capital, you are not going to see us participating in a company where somebody can write a code in Silicon Valley and automate it out. You are not going to see us participating in a business where somebody can write a code in London or Paris and automate. So we want to see where a functioning local presence becomes a comparative advantage for the sources of our business. In other words, if you do not come to do what the startup has done locally, even though you are in Silicon Valley, you cannot work and make that thing happen. So we would like to invest in companies that are organizing mechanics, like in Meko Autotech. We can invest in companies that are trying to provide medical device, like in Lafayette Telehealth. But we are not going to invest in a startup that just provides only app for doctors. Because providing apps for doctors, somebody can launch a beta one from Paris next week. But those physical health devices that Lafayette Telehealth provides, for you to compete with it, you also have to go and make your own physical device. So just training you how we translate these opportunities to our investment thesis and how we actually look at it. So we focus on tech-anchored companies in all sectors. And we have this very, very important philosophy that the supremacy of business model is what matters. We do believe that there is nothing that is more fundamental than business model. So we spend time in our playbook to work with our founders and companies to see how they can deepen their business model, because we think that business model is actually the most important element in any business. And under that business model philosophy, you will now have that great products plus great execution will always give you great companies. So as that happens, one thing we look at is marginal cost. In economics, the marginal cost is essentially the cost of serving an additional user of your business. We want to see how can you improve that marginal cost over time. Some people also use the word unit economics. How can you add users without breaking the curve? So if we can see that it's a huge, massive opportunity for you to improve that marginal cost, we will begin to like that opportunity. So we also look at patterns around the world, look at how market systems have evolved over centuries. We have data sets that said, okay, about 1917, this was where America was. They were built companies made of steel companies and companies like Standard Oil, companies like Bethlehem Steel. They were the most dominant companies 1917 in the United States. And in 50 years later, thereabouts, now saw the called it the technology infrastructure companies in the United States. And now in 2017, thereabout, we now see the knowledge companies. We will say, if you are investing or you're building a startup in Africa, what stage are we and what are going to be the winners? Who are going to have the opportunities to unlock the opportunities in this market? Because if they have started Facebook in 1967, Facebook would have failed. If they have started, let's say, Google in 1917, Google would have failed. So it is not just the idea that we look at. We look at what we call anchor readiness in markets to see if there are correlations at a particular point in that market that can actually help that company thrive. And last period, in the last cycle, we sent the company to Y Combinator, so proud of it. And in this one, also, we've already gotten one company also in Y Combinator. We have about 2 that are actually at the final phase. So it seems that we have been making calls that to a large extent, some of the finest VCs in the world also coming into validation. So we think that these patterns and phases and timing are even more important than the problems that the founders or the companies are solving, because you can have a very good vision, but if your timing is off, you are going to have a difficulty. So let's show you this one. In Nigeria today, using Nigeria as an example to represent Africa, these are our dominant companies. You could see here that we have the cement companies there. You have a food company. You have the technology infrastructure company like Airtel and MTN. These are the largest publicly traded companies in Nigeria. If you go to the United States today, these are the most dominant companies: Apple, Facebook, Microsoft, Google, basically what they call Alphabet, and Amazon. There is something you can see. Nigeria is still trying to capture the opportunities which are evident in 1917 and 1967, but Nigeria has been able to combine them at the same time. which is very, very amazing. In the sense that our cement businesses are interlaid with infrastructure companies. And then you can also see that we are still dealing with food. It remains a very big issue. Just look at the top 20 companies in the Nigeria Stock Exchange. You can even see that a palm oil company remains one of the fastest growing returns in the Nigeria Stock Exchange. That tells you where we are still and where. But now you now look at the US, they're now moving into the knowledge base. So we said, okay, are there compounding opportunities available in the cement? Where is the market tending towards? Because if we have already attained 1917 and 1967, what is going to be the future? It is also on this that we look at business models. We like B2B e-commerce, but we do not like B2C e-commerce because we look at patterns and sector maturity. The reason why we do not like B2C is because we struggle how the logistics can be improved upon. So by looking at what has happened in India, what has happened in the United States, understanding that there is a latency before what happened in some of these economies before they begin to happen in South Africa, we say these ones are potentially going to be the future in those opportunities. So we now say, hey, go back to that great old curve, which looks at the world, 2,000 years of GDP. We said, okay, we are in the innovation age, society age now, where the mechanization is coming, mass production is coming, automation is there, machine learning is coming, and we are now moving into the age of autonomous system artificial intelligence. This is the wave one, this is the wave two. And at this wave one, you can see that we are accelerating the GDPs in most parts of the world. Places like South Africa, we have not picked up very well, but we are expecting that we are also going to join quickly. So what are the companies that are going to drive this innovation society age, wave one and wave two? We now say, in going to United States, going to India, going to Russia, going to Japan, what were the likelihoods that those companies could mirror what they had in those ages? We also look at it. So when we now see it, we come back to this. We saw the evolutions that happened, the voice telephony age of 20,000, the mobile internet age in 2010s in Africa. The voice telephony age was when Econet, when companies like Econet, MTN started coming out at scale, opening up so many telecommunication infrastructure in the continent. And then in the decade of 2010s, there were so many mobile internets. We're now using our phones. But what we believe that is happening right now is that we are moving into the application utility era where instead of just people using their phones for Facebook or for Instagram, people are going to use these phones and the devices to drive logistics, retail, e-commerce, financial services, real estate. And that means that there will be a massive transformation of all these application utilities. And in all these areas, powered by technology, we see massive level of opportunities because they are going to do these things at a level that the incumbents or the present traditional companies are offering, they cannot match. We see them having the capacity to transition their customers to become fans because they are going to give them products and services that meets and exceed the needs, expectations, and perceptions of customers. Perceptions of customers, essentially, we're talking about giving them things that are better. Just imagine what it means today. You are in your house sleeping, and you just wake up in the morning, you check your bank account. Through Paystack or Flora Wave, people were paying when you were sleeping. Compare how it was maybe 15 years ago, where people can only pay you when you are in the office. But now, even when you are sleeping, because you have a code on your website, people can pay you. Imagine what it means that you can have an app. You can organize those that want to ship things and those that are also available to help them move those things. And you may not even be aware, and these transactions are happening on our ecosystem. Look at what is happening in all these domains. You can see what technology has brought, redefining the nations, operational rudiments that power the world of commerce. So we see that in these opportunities, there are massive value to be unlocked. And the Africa's economy, which remains less than $3 billion, we see the potential capacity that we can actually hit $10 trillion, let's say within, 15 years. And if that happens, it means that acceleration of value will happen and acceleration of value will be captured. So the question here is that what do we need to do to be part of that ecosystem? As we look into that, we say, this company, are you at the center of the smiling curve where the value is least, or are you at the edges of the smiling curve? And if we see that our company is at the center, we talk to the founder and the team and say, hey, listen, you are creating so much value, but you are not capturing value. This is not a very good business model. And we will want to see how we can shape that business model so that you do not just stay at the center of the smiling curve without capturing value at the edges of smiling. I give a very practical example. Most banks stay at the center. Here, they power the infrastructure of the banking system, but the fintechs stay at the edges. And that is the reason why companies like Kuda could basically be bigger than most banks in Nigeria. That's the reason why Flutterwave today is largely the largest financial institution in Nigeria. But Flutterwave stays at the edge during discovery and aggregation, while the banks are the center of the curve. And some can Visa, MasterCard, and VAP stay at the origination and creation at the edge of the smiling curve. We do not want companies that stay at the center alone. If you want to stay at the center, you must stay at the center and also stay at the edges, because the value that can be captured is massive at the edges. I have a very great article on this in Harvard Business Review. If you could just Google it, it's your startup capturing value. It's a very, very good hypothesis that this is not just being the best, serving customers very well without the ability to capture value. So in our companies, in Tekedia Capital, we push our members that they must also build their products and services to stay at the edge so that they can also capture value. So we also look at the patterns that are happening in the world. If you look at the top 10 technology companies in the world, about 80% of them run on aggregation. And also looking at the power of controlling demand, which is very important. In the past, the most powerful companies controlled supply. Just think about it, maybe 1980. If there was a news outbreak in Nigeria, there were about 5, 6, 7 newspapers that could report that. If they didn't want to report, no one would know because they could kill it. They control supply. So they became so powerful because they were the people that control the source of news, and they became the gatekeepers. So if you can work with the publishers and the editor-in-chief of those 5, 6 newspapers, you have control the source of that news information. And because of that capacity, advertisers will go to advertise through them because they were the only sources people can get news for the day. But today, if there is a major news outbreak, I promise you somebody will tweet it, somebody will write it on Instagram, somebody will post it on Facebook, LinkedIn, and co. So those newspapers do not have that power they used to have, because what matters today is no more the supply. A new kingship has come, and that is that demand influences the equilibrium point in the market system. So at Tekedia Capital, we want to see, is your product influenced by the power of that demand control than any other thing? And if that is the case, what is your position in that market? That's why we're not going to fund some set of companies, because we think that the redesign that the internet has brought may actually make it very, very difficult for them to find opportunity in the market. So we also say, we look at what we call the one OASIS strategy, we look at the double play strategy, we look at scalable advantage. And when we have tested all these things, we now said, this is where. So we have taken positions in some startups, and since we started, and to a large extent, they have been extremely stellar. And for many of us that don't know what the one OASIS strategy means, one OASIS strategy is basically our hypothesis that where companies can make money may not be in areas people know them for. If you go to Amazon.com, people know Amazon as a company that does e-commerce, but Amazon e-commerce business is not where it makes money. It makes money through the Amazon Web Services. But Amazon Web Services would not have happened without the e-commerce, because it is the Amazon e-commerce that actually creates the opportunity for the Amazon Web Services. As malls and supermarkets in America are collapsing, most of them are going digital. And as they are moving online, they are creating opportunities for the AWS. And without that e-commerce disrupting them, many of them will not be coming online. If you go to India, Flipkart, one of their largest e-commerce companies, all the places processing system goes to the phone fee. Without the Flipkart, the phone fee will not have the opportunity. Alibaba and Alipay. So you always see that combo where one remains dominant and the value is captured by the other one. So you see Flipkart, phone fee, you see Alibaba, Alipay. That is how the world of commerce has come. And that was the reason why Apple said we are not going to be reporting the total sales of iPhone, because it was not relevant. iPhone remains the one oasis, but the value derivable from iPhone now goes through services. So iPhone feeds those services, which now make most of the money and potential powerful money for Apple. So if you are a startup, we want to say, what is your one oasis and what is your double play strategy? So when we do these things, we now take position. But one thing as I'm rounding up here, ladies and gentlemen, is this. We see that the future is going to be one of abundance. This is a Cambrian moment of entrepreneurial capitalism, where all these companies across market niches are going to show something amazing. We are hoping that by 2023, there will be 15 unicorns in continental Africa. India has minted 25, 28 already in 2021. And you could see the extrapolation of this unicorn. Unicorns are companies of market cap of less than 1 billion. It doesn't mean that you have some Indian companies that are worth 30 billion, like Byju's, more than nearly 24 billion. It's still considered one unicorn. So you have a company worth 24 billion, considered one unicorn. They have minted 21 just in 2021. I think Africa has about 5 unicorns or thereabouts, but I believe that by 2020, we're going to have 15. And that means that these companies will become extremely huge and bigger than most stock companies who have currently in the stock exchanges. You can see the trajectory for the world from 269, 2017, we are now having 2021, 831. This is what they call a Cambrian moment. It's an exponential growth in the acceleration of value, giving you a compounding leverageable factors that will change the ordinance of market system. And what we do in Tekedia Capital is we pool resources by asking people to join our syndicate. We now pool those resources and invest in this startup. You are going to make a decision on the startup we invest. We only present about 7 to 8, 10 companies at a time. When we present them, you look through them and you make a decision on the one you invest. And during the investments, you say, I like this one, I'm not interested in this one. You need to invest a minimum of $10,000 per startup. You can invest 200,000, you can invest 50,000, but it has to be a minimum of 10,000. And even if you join a syndicate, you don't want to invest in a cycle, that is also fine. You just say, I'm not interested in investing in that cycle. So we have brought in Africans, global citizens, investment club, people in diaspora companies. We only focus on technology-enabled companies. It could be incorporated anywhere in the world, but it must be majorly operated in Africa. The reason being that we don't just see what somebody can do to change what is happening in New York. We don't see what somebody can do to change what is happening in London. We believe that sub-Saharan Africa remains the place that is going to be the last frontier. And this is a place where if you put in even $10,000, great things can happen. In New York, it's not even enough to pay one guy for him to drink good coffee. So what happens here, we focus where we think the value of the future will come. There is also an annual fee of 1K or 4 cycles of our investment deal flow, 430,000 if you're paying in Nigerian era. We take a 20% carry for any profit made on that investment. And there are so many ways that we can invest. So what we usually do is not just beyond money. We bring in thought leadership. We work with these founders. We work with these startups. we see ourselves as unofficial co-founders with them, helping them to advance and also helping them, feeding them into new global funds to make things easier for them to raise further capital. And we do that. Interestingly, by Monday, we're releasing a new set of companies. There are about 8 of them. And I think one just got already in Y Combinator. We made a decision about 2-3 weeks ago. Interestingly, last week, they called them that they are into YC. But we are very happy because we have already negotiated our valuation. So it's going to be a very great one for us because we like to see that we are making the right decisions, because as these foreign companies are coming to invest in this startup that we are working with, it gives us confidence that they are seeing the same thing that we are saying. So our deal flow goes up in October 18, which is Monday, and only our current members have access to, and they can see. And so, ladies and gentlemen, without taking more of your time, this is a presentation, and this is our playbook. And we will be honored to have an opportunity of working with you in Tekedia Capital Syndicate so that we can build the next Africa. So now I would now like to take questions and from members. Okay, go ahead. Frankie, please go ahead. Thank you.
Thank you, Prof, for this brilliant presentation. Can you come back on the previous slide? I didn't really understand. What is this $1,000 versus the $10,000?
Okay, the $1,000 is to join our membership of a syndicate, basically to join the club, the investment club, quote. Okay. Then when you are investing in a startup, the minimum you can invest is $10,000. Then you can invest more. Okay. You can join with a friend, you can join with a family member, but for Tekedia, we can only sign our contract agreement with only one person. So what we usually advise families, maybe husband and wife that are bringing in 5K, if you cannot nominate one person to sign with us, go and incorporate a company and let that company invest on behalf of 2 of you.
Okay.
Because in that agreement, you can't have more than one name. You just have to be one name.
Okay, thank you.
Okay, great. So Emmanuel, please go ahead.
Okay, good evening, Prof. Thanks for this presentation. First, as the
good evening.
The next demo, as you said, is on the 30th of October, and it's only for the current member. And then my question is,
no, you could join. Actually, that's why we're doing this. You can once you join. You can join.
Okay, so once you join, okay. Second question is that how or what is the permit for the cash out, or is it only on the Tekedia Capital decided to cash out before the investor could able to draw back from the investment, or how does that design?
Okay, so on our exit model, there are so many ways. I mean, but I don't want to go too theoretical here. Of course, everyone knows IPO, but unfortunately, IPOs are not common in Africa.
Yeah.
So what we have done is what they call secondaries. Secondaries is when you have invested when the startup is worth $1 million, and all of a sudden a startup is worth, let's say, $50 million, and a very big investor is coming. He has an option to buy out anyone that wants to sell. So in short, in one of our startups, we have had a proposal like that. But interestingly, no one likes to take that because you may still be greedy. Say, let's keep this thing going. So the secondary is a way to exit. You can always exit before the company is acquired or before the company goes to IPO. When a future big investor who just decide to buy out everyone, they are not going to force you. But that decision will be made by Tequila Capital, not by the individual investors. Remember, there could be 20, 30 companies investing through us. So you cannot make that decision yourself. But however, if you have that case, we always talk to our members. We had a case like that in one of our startups. We took a sample and all our members say, no, let's continue to stay. So we continue to stay in that startup.
So that means it's more or less like all the members in that particular investment, like a vote.
No, not at least the majority. I bet it's not rocket science, but we have a pause. We cannot get into a company when it was worth 1.2 million. The company just worth 20 million and we're already trying to get out. I mean, when we think that the company can hit 200 million, so why would we just sell out so quick? So we think that from not Tekedia Capital specifically, but from my own private investment before we set this up, I have done a lot of secondaries. You always know when the time is right. And then you try to get out because you think you've gotten so much that you can get out. But that's the opportunity that is there, not IPOs, because people will say, are there IPOs? Most of the startups that are investing in Lagos are actually buying out some of the early investors. Sometimes when I'm giving them $5,000 and they will just buy you out and say, okay, we send you $50,000. That's it.
Okay, thank you.
Okay, great. So Patrick, please go ahead. Are you there, Patrick? Okay, if Patrick is not there, let's go to Ernest, please. Ernest, unmute yourself. Thank you.
Hello, Prof. Good evening. Good evening, everyone.
Yeah, good evening, Ernest. Go ahead. Thank you.
My name is Ernest. I'm calling in from Umuahia, Abia State in Nigeria. So,
Welcome.
Prof, I want to know, does Tekedia Capital partner with a company that is still in idea stage, though the company has been registered?
In short, we have given startup money to register. I think we gave our pass, which is now going to Toronto, to open an office in Toronto this year. We gave you the first money to register the company. If you like we take really, really early stage risk. When I say risk, we take early stage risk. So if you like what you plan to do, and we have seen that your constructs are good, we are actually early stage. We don't want when you're already big because we don't make a lot of money. Remember, for somebody to invest $10,000, it needs to be a high risk game. If you put $10,000 in a company that's worth $50 million, what is the gain? So it's not really the stage you are in terms of what are you doing? Do we think that has a huge value in the market? So,
okay. All right. Yeah. Thank you very much, sir.
Okay. Of course, if you go to our website, our email is capital@fastmicro.com. And if you just see that's our email, you could send it. My team, they always there. They always good to respond. So, Patrick, are you there now?
Yes, Prof. Can you hear me?
Yes, we can hear you. Go ahead.
Okay, thank you very much. Actually, my points still revolve around most of these unicorn, most of these companies that have been invested upon are not really profit-making companies. We are looking at their books. They are raising a lot of money. They are doing transactions, but they are not really profitable. Now, there are bricks and mortar companies, right, that actually turns profit. Why can't we? I'm just suggesting that you are actually in a very good position to do two things. Double play. You've been saying about double play. Why not double play? Real Street investment and the Wall Street. Your fintech represent Wall Street. Let's have also Real Street that can create employment, that can give opportunity for people to actually get into company that actually can turn profit.
Okay. Yeah.
So that's what I want to.
Yeah. So unfortunately, I'm not in Tekedia Institute. Let me change this thing here. This is actually Tekedia Capital. So because of that, the way we are really looking at this here is not trying to fix Africa problems or fix Nigerian problems. What we are trying to do here is to become a good fiduciary, responsible, global, ethical, legal citizen. There are people that have to go and build roads. There are people that have to go and build water board. There are people that are going to build railways to solve problems. Unfortunately, we are not, because we think that if we give you $50,000 to go and set up an a very good app, and that app can help pregnant women get help, and somebody possibly in New York can see it and invest 1 million, we will do it. But if we give 50,000 to go and build a drainage in Aba, that 50,000 may not even be enough to get a licensing fee. So what I'm trying to say here is we're not claiming that we are coming to solve the societal problems. We have chosen the path we want to play because those paths are the paths that we have seen that when we play in them, we're also going to fix a friction and people will join us in that movement. I don't want to invest in a business that there will not be follow-up investment. This is actually how we measure our businesses. When we invest 10,000, 20,000, 50,000, is somebody going to invest 100,000, 300,000, 1 million? If we just invest 20,000 and nobody follows up, we have failed. These areas you are looking at, we don't have follow-up investment in them easily. And that's why we're not picking them. But hopefully in 20 or 30 or 10 years, when this current generation of young people that are becoming paper millionaires begin to have the real cash, all these areas that you are talking about will can now come up. So let's go to Olabisi, please. You can just take 2 more questions because we want to really be on time with everyone. Olabisi, go ahead, please. Thank you.
Hello, Prof.
Yes, good evening.
Good afternoon, everyone. My name is Olabisi. Well, it's still afternoon here in Georgia. It's about 2 p.m. here. Thank you for this brilliant idea. I mean, it's a very good call. My question is this, although you have addressed it in a way, because I have some ideas I would like to share with you. So, how do I go about it? That's one question. Then another question, if I invest, how do I monitor it, or how do we get report on the progress of the companies or the investment that we decided?
Okay, yes. There is, we have an update in Tekedia every quarter, and we update our members on the startups that we have stakes. And then if you have an idea, you can send your pitch deck to capital@fastmarket.com. Did you hear me? Okay.
I didn't hear you. You're breaking up.
Okay, I think it could be from your network. I said that we have an update every quarter on our startups. And then if you have something you want to share with us, go to our website or just send it to capital@fastmarket.com. We'll look at it. Okay. Yeah, let's go to Bukimi, please. Aladi Magic, please go ahead.
Thank you.
All right, thank you.
Okay, thank you, Prof. Thank you, Prof. Yes, can you hear me?
Yes, we can hear you. Go ahead.
All right, thank you. Prof, I actually sent an email, but I'm yet to get a response. I have a business I've been running for 5 years, but now I'm trying to scale it, and I have a new idea. So I'm trying to get someone that will come in, like a co-founder, and eventually raise funds. Even though I'm working on putting up the pitch deck, registering the company, it's already an existing company, but I'm trying to incorporate technology into it. And I've tried to reach out. I've tried to reach out to Nnamdi. I sent email. I've not gotten a response.
Okay. I think we'll get a lot of that, but they will respond to you.
Yes.
And they will surely respond to you. Just send another email and they will respond. But I tell you, it could also be that you are too early. Now you've not registered a company. My team, sometimes they will just prioritize companies that are already in operation. So you've not even started. So for them,
No.
That,
sir, I have a business running, which has been running, is in the construction industry, been running for over 5 years. So
okay,
now I want
so
to
we'll come back
put
to
up
you.
a new venture.
No, we'll come back to you.
I want to put up a new venture. Okay.
Yeah, let's go to Ifedayo, please. Ifedayo, and we just have about 3 more minutes, and we'll be rounding up. Ifedayo, please. Okay. If not there, Gloria, please go ahead. Gloria, please go ahead.
Okay. Good evening, everyone.
Yeah, good evening. Ifedayo, hold on, let Gloria speak. Then after that, you can speak.
Okay.
Yeah.
All right.
Okay. Thank you, Prof, for the presentation and everyone's questions. So my question is almost related to the last speaker. I wanted to find out if you take solopreneurs, that's people that are just they're the sole founders, they don't have co-founders, or if you have a matchmaking system for founders as well. And also, if you have what you expect to see in a pitch deck of an idea that is supposed to be sent to your company.
Yes, actually, if you go to our webpage at the page, if you just Google Tequila Capital, we actually explain what we look for a company. So just watch that video, it explains it. Whether you are one founder or co-founder or with many, we don't really care. Yeah, we could be your co-founder in quotes. So we know that we invest significant effort with our members. So we could be that co-founder. The most important thing is what you are working on. So watch that video, just Google Tequila Capital, you see that video on our website. Yeah. So Olabisi, I've also sent you a note, private notes through chats here. I don't know if you heard what I answered because of your network. So just check it in case you didn't see it. So Ifedayo, please go ahead.
All right, Prof. Good
I
evening, sir.
heard you.
Yeah. Okay. Yes. Go ahead, please.
Okay. I saw something on your feed sometimes ago that has to do with touch and pay and stuffs like that. Was it from you? Is it part of your project? And if it's part of your project, what is the availability status of that particular item?
What do you mean by availability?
Like, is it available for people? I think it's a project, something I saw on your feed, and it's like a machine that you use and print papers for, I think, motorists.
Yeah. So the question you're asking, we'll answer that in the membership board, and so we don't want this close to our startups. So if you are, I don't know if you are a member of a syndicate. If you are, we'll give you that answer. And so that's information we leave for our members.
Okay.
Okay. So we'll be very happy to welcome you. Then we can and we have opportunity to discuss with you. Yes. So if you are paying in naira, it's 410,000 naira. And 410,000 naira. If you go to tekedia.com/pay, you see our website. So, gentlemen and ladies, we are extremely good on keeping time. And we said 1 hour, and it's just about a minute to time. And I will take the last question from Michael, then we will round up. So, Michael, go ahead, please.
Okay, good evening, Prof, and good evening, everybody in the house.
Yeah. Yes, go ahead.
Yeah. Hope I'm audible enough.
Yes, you are audible.
Okay, so most of my questions have been asked and cleared, but I just want to have one more thing to ask about the $1,000 registration. That's the investment club registration. I want to know how long does this serve someone who registers?
I say it's 1 year or 4 cycles. 1 year or 4 cycles.
1 year. So, and I just want to know one more thing. Anybody who registers and does not make an investment within that 1 year, what happens to the registration?
You've lost it. If you don't register, we'll give you 4 cycles or 1 year. If you don't make investment, it means that you have to pay again if you want.
Okay, that's all. I just want to be clear with that.
Okay.
Thank you very much, Prof.
Yeah, so thank you so much, gentlemen and ladies. I'm sorry that we cannot take all the questions, but please, if you email us at tekedia@fastmicro.com, we can make sure that we answer your question, or I can also speak with you directly, or you could reach out to Arinze or Itayo and Namdi and our team. But we have to close now. Thank you so much for spending your time with us, and we'll be hoping that you will join us at Tekedia Capital so that we can build the next Africa. Have a wonderful